Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 4th, 2025, and we're diving into the latest earnings report from Science Applications International Corporation, or SAIC, a leading technology integrator in the defense, space, civilian, and intelligence markets. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss SAIC's second quarter results for fiscal year 2026. There's a lot to unpack, from revenue contractions to strategic contract wins.
Revenue and profitability overview. Let's start with the top line. SAIC reported revenues of $1.77 billion for the second quarter, marking a 3% contraction compared to last year. John, what are the key factors behind this decline?
The revenue contraction is primarily due to the completion of certain contracts and a reduction in volume on existing contracts. However, it's important to note that despite this dip, SAIC's net income surged to $127 million, and their adjusted earnings per share came in at $3.63, significantly beating the analyst forecast of $2.25.
That's impressive. How did they manage to achieve such a strong EPS?
SAIC's profitability was bolstered by improved contract portfolio performance and a recovery of costs from a patent infringement settlement. These factors, along with strategic cost management, contributed to the robust EPS.
Operational efficiencies and future outlook. Moving on to operational efficiencies, SAIC's operating income increased to $139 million, and their adjusted EBITDA reached $185 million. What does this tell us about their operational performance?
These figures indicate that SAIC is effectively managing its operations with an adjusted EBITDA margin of 10.5%. However, the company has revised its revenue and adjusted EBITDA guidance downward, reflecting a cautious outlook due to slower on-contract growth and delays in new business awards.
How is SAIC planning to navigate these challenges?
CEO Toni Townes-Whitley mentioned that SAIC is aligning its cost structure while maintaining key investments to drive long-term value. They are also focusing on sustaining their free cash flow, which increased to $150 million this quarter.
Strategic contract wins. SAIC's net bookings for the quarter were $2.6 billion, with a book-to-bill ratio of 1.5. Can you elaborate on some of the notable contracts they secured?
Absolutely. SAIC won several significant contracts, including a $928 million contract with the U.S. Air Force for the Hope 2.0 project, a $728 million task order with the Department of Treasury for cloud services, and multiple contracts with the U.S. Navy for training solutions and electronic warfare systems. These wins demonstrate SAIC's strong position in the defense and intelligence sectors.
How do these contracts impact their future prospects?
These contracts not only enhance SAIC's backlog, which stands at $23.2 billion, but also position them well for sustained growth in the coming years, despite the current revenue challenges.
CEO's perspective and strategic initiatives. John, what insights did CEO Toni Townes-Whitley share regarding SAIC's strategic direction?
CEO Toni Townes-Whitley emphasized the importance of aligning SAIC's cost structure while sustaining investments that drive long-term value. She acknowledged the challenging revenue environment, but expressed confidence in SAIC's ability to execute its strategy effectively.
What does this mean for investors?
For investors, this means that while the short-term outlook may be cautious, SAIC is taking proactive steps to ensure long-term growth and stability. Their strategic initiatives and strong contract wins provide a solid foundation for future performance.
Key takeaways. As we wrap up, let's summarize SAIC's performance this quarter. Despite a 3% revenue contraction, SAIC delivered a strong adjusted EPS of $3.63, significantly beating the forecast. Their net bookings reached $2.6 billion, and free cash flow was robust at $150 million. John, any final thoughts?
SAIC's strategic contract wins and focus on operational efficiencies are commendable. While the revenue environment is challenging, their proactive approach and strong backlog position them well for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on SAIC's performance in the comments below. Until next time.